You know, it's not every day you see a government do a complete 180 on a major technology. But that's exactly what happened with cryptocurrency in the United States. We're going to talk about how U.S. policy went from calling crypto worthless to embracing it as a strategic national asset. It's a pretty wild story, and it all happened incredibly fast.
So let's start the clock back in 2019. This quote right here tells you everything you need to know about the official White House stance. It was deeply, deeply skeptical. Crypto wasn't just seen as some risky bet, it was viewed as a potential threat to the US dollar, tied to illicit activities, and built on, quote, thin air. That was the starting line. So the big question, right? How on earth do you get from that level of public dismissal to where we're headed? This whole journey is just a fascinating look at how technology, politics, and global economics can collide and create something totally unexpected.
And here it is. This is the destination. The creation of a strategic Bitcoin reserve. The U.S. government literally saying we are going to hold on to Bitcoin forever as a national asset. It's a mind-blowing shift. So let's unpack the timeline and figure out how we got from point A to point B.
Okay, first up, let's rewind to the period between 2017 and 2021. This was, without a doubt, the era of skepticism. The government's whole approach was defensive. It was all about managing risk and protecting the old guard financial system.
And the actions from this time really tell the story, don't they? You see the sanctions against Venezuela's petrocrypto in 2018, treating it like a tool for rogue nations. Then you have the public dismissals, followed by a really aggressive SEC under Chairman Jay Clayton. They were cracking down hard on new projects, and maybe most importantly, just kept saying no to a spot Bitcoin ETF, which would have been a huge bridge for mainstream investors.
But what's really interesting here is that even in this period of peak skepticism, it wasn't a totally unified front. While the SEC was playing hardball, another agency, the OCC, led by Brian Brooks, was actually doing the opposite. They were quietly giving banks the green light to hold crypto for their customers. So right there you could see a crack, a fault line in the government's approach.
All right, let's jump forward to the big turning point, the 2024 presidential campaign. This is where the entire political calculation around crypto just flipped on its head, mostly because of a brand new, very loud group of people, the crypto voter.
And boom, there's a 180-degree turn. This quote from the Nashville Bitcoin conference says it all. The language totally changed. We went from defense to offense. It's no longer about thin air. It's about making America the superpower of crypto. It's about encouraging innovation, not stamping it out.
And this is huge. It wasn't just talk. For the very first time, the official Republican Party platform had a section just for crypto. It talked about protecting the right to mine Bitcoin, the right to hold your own assets, and it came out strongly against a government-run digital dollar. Suddenly, crypto was being framed as a core freedom issue.
So, with the election over, how do you turn those promises into reality? Well, in early 2025, the new administration hit the ground running. They used a combination of executive orders and putting the right people in the right jobs to completely reshape the government's stance. And they did it fast.
I mean, look how quick this was. A big executive order sets a whole new pro-growth tone. They immediately got rid of restrictive banking rules, like one called SAB 121, that had made it almost impossible for banks to get involved. And then, crucially, they started putting key people in charge who were ready to execute this new vision.
And this was the new team. You had David Sachs as a sort of crypto czar to get all the agencies on the same page. Paul Atkins came in to lead the SEC, which was a huge signal that the focus was shifting away from lawsuits. And you had Scott Bessent at the Treasury pushing for clear rules for stablecoins. In this case, the old saying was true. Personnel really was policy.
All right, so with the executive branch all lined up, the action moves to Congress. The goal now is to turn these new policies into actual laws that will last. And in July 2025, two really big bills started making their way through the system. First up was the Genius Act, and when it was signed into law on July 18th, it was genuinely a historic moment. For the very first time, the U.S. had a clear federal rulebook for stablecoins, those digital tokens that are supposed to be pegged to the dollar.
The whole point of this act was to build trust and stability. It created a special license for issuers. It demanded that every digital dollar be backed one-to-one by super safe assets like cash. And maybe most importantly, it said these things are for payments. They're not securities, which meant the SEC wouldn't regulate them.
So the Genius Act took care of stablecoins. The second bill, the Clarity Act, was designed to handle pretty much everything else. Its goal was simple, but absolutely massive. Finally,
draw clear lines about which government agency regulates which part of the crypto market.
And this was the heart of it. The Clarity Act basically tried to divide up the turf. It would give the CFTC, that's the commodities regulator, power over things like Bitcoin. The SEC, on the other hand, would regulate digital assets that looked and acted like traditional securities. For years, the industry's biggest question was, who is the cop on the beat? This was supposed to be the answer.
But you know how it goes. Passing laws is one thing, but the real world, that's something else entirely. This new, friendlier era for crypto pretty quickly smacked right into the same old problems: crazy market swings and good old-fashioned political gridlock.
And here's that reality in chart form. All the optimism about new regulations sent Bitcoin soaring to a new record high, $126,000 in late 2025. But just a few months later, by February 2026, it had crashed all the way back down to 60 grand after some new trade policies spooked the market. It was a brutal reminder that, yeah, crypto's still really, really volatile.
And that chaos in the market was matched by chaos in Washington. The Clarity Act, which had sailed through the House, just hit a complete brick wall in the Senate. And it all got stuck on one single, really contentious issue.
The whole fight came down to this idea of stablecoin yield. The crypto world argued that platforms should be able to offer you rewards or interest if you hold stablecoins. But the traditional banks, they saw this as an existential threat. They were terrified that everyone would pull their money out of savings accounts to get a better return on stablecoins, so they lobbied like crazy for a total ban. This clash between new tech and old money just stopped a bill in its tracks.
So, we end up right back where we started, looking at this unbelievable transformation from thin air to a strategic Bitcoin reserve. And this whole story, it really forces you to ask a pretty powerful question. In a world where technology moves this fast, how quickly can the fundamental rules of our economy be rewritten? And what's going to be the spark that sets off the next big reversal?